I think we're starting. Okay, so hopefully you can hear me. I've got to try and figure out how I get the chats up here as well, so I don't miss any of your questions. Let me just see if I can do that while I'm talking. Right. Okay. Right, well, that's hopefully loading and I can see any of your questions. Thanks for joining me. I'm going to run through as many currency pairs as I can today with some trade ideas in them. The first, I'm going to start off with the Canadian dollar versus the US dollar. This is actually not the strongest signal I've got out of my group of signals today, but still worth a mention. This looks quite strong. We are obviously in a longer term bull trend anyway. You can see that from the daily chart here. We've been heading up since at least May, or well, actually, if you have a look at the weekly chart down here below, the dollar's been pushing up against the Canadian for quite a long time now. So we've got, hold on. We've got, a nice long bull trend going all the way back to 2012, actually. So this is really a three-year-old bull trend, not worth betting against. So buying into dips does seem to work. You can see, interestingly here, actually, how this sell-off earlier in the year came nicely back to meet the peak in the first half of the year. So, you know, nice support resistance thing working there. So yeah, as I say, stick with the bulls really. So we're looking, let me try and get the daily chart back up there. As I say, sticking with the bulls. So if we do see any pullback, we're a little bit overcooked, I think, in the short term. I'll just check that short-term chart in a minute. But if we can pull back to this trend line here, you can see that this little trend line comes in around the 132.10, 132.00 area. I think that's the best opportunity for buying into a long if we get that chance this week. Just showing you the short-term chart now. You can see we've got a little bit overbought. I'm just looking at the 4-hour chart on the top there. We did get a little bit overbought on the slow stochastic there, so we're pulling back a little bit. And this also ties in quite nicely with a 23% fib in the short term, at 132.10, 132.00 area. There's even another short-term trend line coming in here on this chart. So I quite like that lower 132.00 area for a small long position. If we can, I'm going to try that one myself later if we get the chance. I'm just trying to make sure I'm in the room to see if there's any questions I need to be following here. Okay, moving on to the next one. New Zealand dollar. And if you've got any pairs you'd like me to have a look at, as soon as I'm logged into the chat, I'll be able to see. Okay. Right, sorry, a bit slow here. Waiting for this chart to load. Okay, here we go. Right, New Zealand dollar versus the US dollar. Okay, this is the short-term chart. So you can see we've had a nice correction over the last couple of weeks, really through the second half of October and the first week of November. We've actually retraced 61.8%. I do love a Fibonacci. So we've pulled back to that support down there, just above 64.87 actually. We bottomed out yesterday. Let me see, we got to 64.95, so pretty close. Certainly unwound what was an overbought situation on the stochastic, so that's looking a bit better for the bulls. But we'll go on to the longer term chart now. So you can see this New Zealand dollar has not only found Fibonacci support, the short-term Fibonacci support, but we're also just testing this little trend line here. I've added the trend line now, and I think this is because I think we could just bottom out here. This purple line is a 55-day moving average, which also ties in quite nicely, which is why I've added the trend line, thinking that we could bottom out. We've become quite oversold on the daily chart. So I think this is an opportunity. Maybe try a small long position here if we got the chance down around the 6,500, 64.80 area. 64.90 area, really. We may have already bottomed out. In fact, we may start a recovery. If we can get a recovery, we should at least test yesterday's high and get back quite quickly, I think, up to the 65.60, 65.70 area. You can see there's a little bit of activity just on this chart around that area. And the blue line is the 100-day moving average, so it's relatively significant. And I think that will act as a first target. If we can push above 65.70, and indeed if we can close above that at some stage during the week, that would be more positive, and we could perhaps resume the bull trend. You can see there is a bit of a negative trend on this one if you go back further. So actually it's worth noting there's some interesting stuff on the weekly chart even on this. So yeah, the longer term trend is certainly negative, and you can see again how these fibs have worked really, really well. Since the middle of 2014, we saw a good sell-off for about a year or so. Nice bounce, but you can see how this 23% fib and even the shorter term 38.2 really did hold that rally. So in the longer term, the bears rather, definitely have control of this. So buying into a long is certainly a lot riskier than buying into a long on the dollar versus the Canadian that we just looked at a minute ago. But I still think maybe a short-term punt, it's worth it. But yeah, you certainly need a lot more caution on this one. Okay. GBP Aussie, yeah, I will have a look at the GBP Aussie. I'm just clicking on the pound versus the yen. So let me do the pound versus the Aussie in a minute, straight after this. Okay, it's starting to load. This is a bit of a confusing picture, I've got to say. I'm not really getting an awful lot out of this pattern over the last 2 to 3 months. We'll check the weekly chart just to see if there's anything on there that we need to be aware of. As soon as I can. Come on. Right, here we go. Okay, so the weekly chart, yeah, nice positive trend in this one. So we would want to be buying into longs, obviously. You can see how this channel's working really, really nicely. This lower trend line, in fact, beautifully over the last couple of months. And every time we've dipped down to this trend line, we've moved nicely off it. So really doing its job of support in the bull trend. So looks like the bulls have control of this market. No point in betting against them. We've got this slightly shorter term channel here, which we spiked below on, let me see, on that would have been Monday, wouldn't it? So, sorry, that would have been Friday, I beg your pardon. Spike below that was a little bit confusing, but we didn't close below it. So this is quite a positive candle, really. And of course, yesterday we took off, rocketing straight off that lower trend line, as you can see. We're now above the 200-day moving average, so that's more positive again for this market. All looking pretty bullish. We don't want to be short this. If we can get through yesterday's high, well, really the target for this would be this upper trend line here. Now, there's a lot going on up here. We've already got the November high from this big red candle up at 187.66. Just above there, we've got the 50% fib at 187.90. So that would be a 50% recovery off the high in August to the low in September. And not far above that, we've got the blue 100-day moving average line coming in at 188.10. So by the time we get up to this area, which I think there's a good chance we will do, we're going to be looking at everything converging around the sort of 187.70, 187.90 area, and that's going to be quite strong resistance. So that will be quite a test. We'll have to see what happens there, but there is a risk, of course, we'll turn around and start heading back towards this lower trend line. By the time we get, if that were to happen and we were to head down, then this red moving average, 200-day moving average, would be pretty much cutting through this lower trend line. So these are the two big areas to watch for this pound versus the yen pair. Around the low 186 area is good support, and then around the a high 187 area is good resistance. If you were able to trade, that's kind of 200 tick range. That's a nice potential for some profit if that were to work. Okay, let's have a look at the. Can't see the charts, Leroy. Are we having trouble? Maybe give it 30 seconds if you've just logged in, because I think it does take time for this to work. Let me know if this is still a problem, and I'll see if I can get someone to check it for me. Okay, so we're looking now at the. We're now looking for the pound versus the Aussie. I'll have to ask FX Street to answer that, because they've set this up for me and I've got no control over it. So I'm just logged in, and they need to help me out on that one. Okay, sorry, I don't know why you can't see the charts, but I think someone's working on that. In the meantime, I can only talk you through my my charts myself, I'm afraid. Maybe you can look at your own to follow what I'm saying. Okay, so pound versus the Aussie dollar. I'm looking at the weekly chart now just to try and gauge what's happening in the longer term on this one, try and get a clear picture. There might be a long delay with my connection, I'm not sure. Okay, so the pound's been rocketing against the Aussie for a considerable amount of time. Let me just see how far back this goes. We had quite a plateau over 2011, 2012, and then we took off at the beginning of 2013. So yeah, nice strong bull trend. And we've certainly held on some good longer term support recently. So that all looks very positive for the bulls at the moment. No point in betting against them. More recently, over the last 2 months, we've had more of a sideways consolidation period. I don't see this as anything particularly negative. I don't see this as a topping pattern. This is if anything, is more of a bull flag type pattern, and quite a big one, but positive nonetheless. So we're kind of in the middle of that range at the moment. The positive side of things, well, we're holding above the 100-day moving average, which I've got around the 1293 area. So we're holding above there. In fact, we hovered above there yesterday. We dipped below that on Friday again on this non-farm payroll. Probably we've recovered nicely. So the question now is, can we get through 21,560? If we can push up through there, we can then test this upper trend line of the bull flag, which is around the 2178.70. Sorry, 2.1708. I've got on my chart anyway, so we want to be looking at 2.170510, should we say? A break above the November the 2nd high, the first trading day of November, is 2.1724. So that would pretty much indicate that we've broken through the upper trend line of this flag, and then we could potentially be looking at something a little more extended on the upside. So yeah, it all looks good to me at the moment. Close below the 100-day moving average wouldn't be so helpful. It's at, as I said, 2.1325. Then we'd be retesting last week's low at 2.1124. We've got some end of, well, in the second half of October, we've got some lows around 2.1090. So that would be the level to watch for on a break to the downside, that we'd then be risking looking at a retest of October lows, and I've got that down at 2.0781. There's also a little trend line down there, so that would be an important support area, which I would imagine would be worth buying into some longs if we were to get there. The 200-day moving average will be creeping closer towards that anyway. So I think those are the key levels to watch for, but longer term, this does look positive. So we're watching to buy a break above the upper trend line, as I say, and above the November high so far at 2.1724, below sort of below the 100-day moving average at 2.1293 would be a bit of a problem. And as I say, we'd be testing November lows at 2.1124 and second half of October lows at 2.1090. Those are the key levels, I think, that you want to be watching for that. Let me see now, where was I? We did pound versus the yen last. So we'll look at the Aussie versus the Canadian now. Trying to whiz through as many pairs as possible, give you some outlines of what could be happening over the next few days and weeks. Still no charts? Okay. Aussie versus the Canadian. I'm not going to spend too much time on this because I'm not seeing an awful lot of opportunity in it. If you've got your own charts, you can see that we've basically been heading sideways pretty much through most of this year, actually. Through April, May, June, July, and August, we traded very much sideways, where we collapsed along with stock markets over that China turmoil when China devalued and the Aussie dollar got whacked. But we've since had a decent recovery. But again, volatile, but only really trending sideways. There's no clear trend pattern to go on. So it's really a case of just trading the levels in this pair, I guess. You look slightly longer term. Yes, we have been heading lower since the middle of 2014. So we are in a longer term downtrend. But over the period of this year, I'd say that's quite tricky to track and tricky to trade anyway. What you have got to watch for is we've got some trend line action going on around the 93.30, 93.20 area. So that is a good support level, but below a break below there would be a sell signal, and that might indicate that the next leg is about to start in the longer term bear trend. So I think that is quite key. It's probably worth trying along with, because we are getting a little bit oversold, and that might well hold and will bounce. So what I'm saying is that's a very key level, 93.30. Watch that carefully. If we see a day or two close below it, that should signal that we're about to start trading lower in that pair and resume that longer term bear trend, as I said. Aussie yen, I think, is worth a look at. So we've been trending lower through 2015, but only gradually in this pair. It's been a very gentle downward sloping trend. Oh, hang on. We're still waiting for this to load. Okay, so yeah, a downward sloping trend certainly over the last recent period. Give it a year, I'd say we've been in this more of a gentle downward sloping trend, nothing too serious. Just let me get the daily chart up. Sorry, taking a bit of time on this one. Okay, so we're in the middle of it could be a bull flag situation. We have managed to carve out a bit of a rally recently, but I'm not convinced really of the whole bull flag thing. If you look at your chart and put some trend lines on it through October, through the last 3 weeks of October, you can see anyway this slightly downward sloping channel that we've been trading in, and the upper trend line really is working quite nicely. We've got a peak in October of 88.61, a peak later on in October at 88.09. So if you join those 2 points up, you'll see how that upper trend line really is working well. And every time we've got close to it over the last few 1, 2, 3, 4 sessions in November, we've pushed up to test that trend line and come off very quickly, in fact. So clearly there are sellers up there ready to unload onto the market whenever we push up towards the sort of 87.20, 87.30 area. 87.40, I'd say actually now is probably the resistance trend, that trend line resistance at the moment. Does look like sooner or later we will turn around though, with these long wicks on these candles over the last 4 days, signaling obviously selling pressure coming in. And if this does turn lower, as I think it will, we're looking at 86.00, 85.80 area could be a really decent target on the downside, first target on the downside. Then we're looking at late October lows at 85.40. 85.45, 85.40, and who knows, we might even continue lower into the middle of October, middle of November we're in now. Middle of November, middle to late November, around the 84.80, 84.70 area. That would be the lower trend line of this sort of month-long channel, or 6-week, 7-week channel, as it will be if we get down that far. Bulls obviously need a break above that trend line, so we need at least a close above 87.40, 87.50 really to start looking more positive, and then we might say that that is actually a big bull flag, and we can head up towards the 100-day moving average around the 88.30 area. That's that ties in with some late October lows at 88.10. So that would 88.10, 88.30 area would be the target on a break above 87.50. I would say the first target. Then we're going to have to look to try and get through the October high at 88.60 if we're going to prolong that recovery. Let me just remind myself of that weekly chart and see if a longer term recovery is likely. Not really. That longer term chart does look quite negative. So I think we'd be looking for selling opportunities, certainly up around that low 88.00, low to mid 88 area if we were to break out and push higher. Oh, you can see them. Great. We've got some charts up. Okay, so hopefully you can now see what I'm talking about here with this little channel. That's worth just worth trading that channel, really. You can put these trend lines on your own chart and trade in and out of these. You've got a kind of midpoint here around the low 86, high 85.00 area. So I don't think there's anything particularly more interesting to talk about on the Aussie yen at the moment. Onto the Aussie versus the New Zealand dollar. Actually, I'm not. There's nothing particularly inciting in that one, so there's no point in wasting a load of time on it. Canadian versus the Swiss franc, though, is certainly a lot more interesting. I've got a position on this, so it's worth talking about. Hopefully you can see the charts are starting to load. Okay, so the big one for me on this one, we are hovering above the 200-day moving average, but we're really not making any progress. So we've become very overbought in the slow stochastic. We've managed to retrace 61.8% of the move from late April rather, down to the collapse at the low that we saw in August. Let me just try and squeeze this chart up a little bit if I can. There we go. There's your fibs. So I like the fact that we're testing the 61.8 here at around the 75, 78 area. We haven't managed to close above there, even though we've had a little spike above it. This candle here on the 4th of November is fairly negative with the new high, but the failure to sustain it and the close back lower. And since then, we've got 3 dojis, really. We're moving up and down, but not going anywhere. So I think this is more of a negative than a positive picture, but I really do need at least a close below the 200-day moving average to confirm the weakness. So 75.25, I would like to see a close below there just to confirm the weakness. I've got a small short position on in this. And I'm hoping to see a close below 75.25 to confirm, and probably worth even adding to shorts on a close below there, because that really would signal some weakness, potential weakness ahead, I should say. If we can see that move to the downside, as I'm hoping, well, you can see I've got a trend line here from the late June high through to the August high and even the early October high. Can you see that pink line there that's worked quite nicely? So I would be looking for that as a good target. 74.60 area. 74.70, 74.60 would be a good target on the downside. So about 100 pips lower from where we are. In fact, that's what I'm hoping for. I'll just show you the shorter term chart. Actually, just show you the longer term chart, because I think that's a significant area there as well. Just let me remind myself. Okay, no, I am wrong about that. The weekly chart isn't that exciting. Let me just have a look at the short term chart. Okay, we are looking at the Canadian versus the Swiss franc, Canadian dollar versus the Swiss franc. The charts have gone again, have they? This is not good. As you can see in the short term, we're just holding below this little trend line. These trend lines are not too important. They're only very short term. But again, we have got a 23.6% fib if you take the low at the end of October at 75.28. That ties in nicely with that 200-day moving average, remember, at 75.25. So that's why we're holding there at the moment. But I'm looking for, well, we backed off. You can see the stochastic unwound from the overbought position. We're edging back up towards overbought territory. So I'm hoping that we'll certainly hold below sort of 7,600 and eventually break below 75.25, 75.20 to signal more of a significant move to the downside. At the moment, we've just been trading sideways for quite a few days now, as you remember, with these dojis on the daily chart, which I can show you again. There you go, this little sideways pattern here as we wait for a breakout, which I hope will be to the downside. Canadian versus the dollar. Sorry, not Canadian versus the dollar. Canadian against the Japanese yen. Again, something quite interesting, worth looking at. The Canadian dollar does look quite weak against a few pairs, or looks like it has potential to head lower against quite a few pairs at the moment. And the yen certainly is one of them, and I'll show you why. Okay, this is certainly one of the more interesting charts I've been looking at lately. So, I'm hoping you can see this. Right, let's see if I can get a weekly chart. Okay, so there's your weekly chart. You can see we're in certainly a negative trend for all of this year. We managed a decent bounce up, having said that, through from the end of January up to, where did we get to? Mid-June. And since then we've collapsed again, breaking the early January low to signal that we remain in a bear trend. We managed to recover. In fact, we're pushing just above that January low now. January low is 91.73, so we're a little bit above there, but let's go on to the daily chart for a clearer picture, actually. Okay, so here's what we're seeing. We've got this 38.2% and 61.8% fib resistance around 92.70. Now, we are just hovering around there at the moment. In fact, I think we've pushed back up above it today. I think we're at around 92.90. This chart seems to be slow in updating, but I've only got yesterday's candle in here for some reason. I don't know why this isn't updating. But yesterday's candle, we pushed higher. We pushed up above this little trend line here, which I'm going to take off now because I don't think that's as relevant as it was. More importantly, we've got this October high at 93.25, yesterday's high at 93.22, so we couldn't beat yesterday's high, and we sold off very, very sharply. I was watching this myself at the time because I was getting into a short position, and I saw us edging higher and higher and higher, and then suddenly the market just turned around and reversed. So someone decided to unload some longs or get into some short positions just ahead of that October high. And you can see that this blue 100-day moving average trend line also just around the 93.30 area. So those two fairly important resistance levels certainly worked in combination yesterday. And we've got this, what do you call that, shooting star with a long upper wick and the red body candle. So the fact that we pushed higher, closed lower on the day, really is not the most bullish thing you'd be expecting to see in this 2-month recovery trend. Holding below the 100-day moving average certainly should put some pressure on. We've become not massively overbought. We certainly have staged a decent recovery in a bull trend, should we say. And when you become overbought in a bull trend, that's often another good reason to be looking for selling opportunities. So all those factors combined, I think, is quite negative in this pair. I wish I could find a trend line to back it up. Let me just have a play around here, see if I can find something. There you go. There is a trend line. As if by magic. I don't think this one's going to be too relevant, actually, but it's worth trying it. No, not really. Okay, no, I'm going to take that one off, actually. Let's just confuse matters. Okay, so not the best trend line in the world, but certainly it is working at the moment. This one, it would appear we haven't managed to close above this trend line yet. So again, another potentially negative factor for this pair. What do we need to see to reverse that? Well, we obviously need to see a close above the October high 93.25 and the 100-day moving average at 93.25.30 as well. We would need to see a close above there to reverse this negative picture at the moment. Short term, not telling us an awful lot, so I'm just going to leave that. For some reason, this pair doesn't update very often. I don't know why on my system. Okay, yeah, I'd be looking. We haven't had a weekly close above 92.70 either. I don't think we've had a daily close, so obviously that would make sense. But you can see the fact that we're battling against this resistance level, which actually I don't even need to show you on there. Let's stick some fibs on there just to make sure there's nothing longer term that I'm missing. No. Okay. Right. The next pair. Euro versus the Aussie. Let's give them a bash. While that's loading, I'm just going to let you know so you can keep track of what I do. My website. I think my Twitter handle, I don't know whether that's showing, I don't think it is, but you can follow me on Twitter there as well. I give away loads of free trade signals, free reports, so it is worth following me there. In fact, if you want free reports, we post lots on a daily basis. I don't know if you've seen this page or not. Just to promote what we do, we post a lot of free reports here, almost on a daily basis. Okay, finally got the charts up. So the longer term picture for the euro versus the Aussie is a bit of a mess, really. We've mostly just gone sideways when you look at this weekly chart over the past couple of years. Managed a little spurt up over the last sort of 2 quarters, but we've pulled back. That doesn't really get me very excited about anything. We now find ourselves just dipping below the 100-day moving average. So actually, the short-term chart is probably the most relevant. So instead of starting on the weekly, I'm just going to start on the short-term chart. Okay, so we're seeing something slightly positive here. We're stabilizing at least. We've got a little bit of resistance at 152.65. If we were to manage to get through sort of 152.70, what was yesterday's high? 152.84. Okay, so we're really going to have to push above there. But I just want to alert you to this area. If we managed to get up to the sort of the 153. 70, 80 area, I think that's quite interesting and worth a little short there in what is a negative trend at the moment. That area is worth paying attention to. So let me get back to the daily chart. The bigger picture is slightly more positive. So just watch that area there. I said the 153 sort of 70, 80 area could be a little tricky. We've got the 100-day moving average actually at 153.43. So just above there, there's some trend line action going on. So yeah, that mid to high 153 area is really quite key at the moment. I've got a feeling we can actually get there and test it. But that would be a selling opportunity. And then we'll find out whether this month and a half bear move has got legs or whether we're going to push back above the trend line. And if we do that, then we could see the slightly longer term bull trend resume. We have seen a bull move from April up to August. This isn't as clear as some of the other markets like the Canadian versus the yen and certainly Canadian versus the Swiss. I don't have a position in this, but I think it would be worth trying something around the mid to upper 153 area just to see if we do continue lower. Okay, I'm going to try and get the Euro Canadian up now. Actually, while it's loading, I think I can even show you my website. There you go. There's my Twitter account. Here's the web page in case you haven't seen it already. If you click on the free, you can see actually we won a FX Street Award, which we're very proud of. Scrolling down, there's plenty of reviews. We've got independent reviews on SiteJabber. There's 50 or 60 independent reviews there, so you can read what our subscribers say. There are some of the latest tweets. And then if you're interested in having a look at what we do, you can actually click on any of these markets. And I think you get a recent batch of reports just in case you wanted to follow what we've been saying. While that's loading, I'm hoping the charts will load. Yep, here we go. We'll look at that in a minute while we wait for the next set of report charts to load. Okay, so Euro versus the Canadian. Try and get a weekly chart up just to show you what's been going on longer term. Okay, so we've come off quite a bit from the peak August. Again, this market got walloped, so that just tells you what's going on. We've broken this little trend line. Well, not little trend line. Going back to April, we've broken below that. That's quite negative. We're holding below the 100-week moving average. That's quite negative. You can see we've been going down for 1, 2, 3, 4, 5, 6 weeks in a row. So it's all looking pretty negative at the moment for the euro versus the Canadian. These are both pretty weak currencies, but obviously the euro is the weakest of the pair. You can see there that trend line very clearly has been broken over the last, well, since the beginning of November. In fact, so it's all looking pretty poor. We broke the 100-day moving average, trend line, everything all looks quite negative. So really, we're looking to sell into any rallies on this one. If we were to get as far as, where are we now? Hold on, we have got quite oversold. I think that any rally is a selling opportunity, but okay, in the short term, we've got one. If we can push above 143.00, which would, well, anyway, we'll just have to watch 143.00 because above there we could push up to this short-term fib target around the 144.10.20 area. Basically this isn't very exciting, but you are looking to sell into rallies on this, and I've really only picked that because it's the first decent fib resistance area. So you've also got if you push up through there, you've then got a bigger fib of 145.10, 145.20. Other than that, really, this just doesn't look very positive. So any return to this kind of trend line up here around the low 144 area would be worth trying a short. As I said, 144, what did I say now? 144, yeah, 144.10.20 I think would be a decent opportunity to try and get a short if we were to manage a good recovery. You can see how oversold we are, so yes, it is possible we'll see a recovery, and that would look quite good. I think if anything, you probably want to be starting to get into shorts there, and if we continue higher, looking to add the shorts up in the low end 55.00 area, because I think that whole 50 pip range looks quite tricky. So yeah, I won't go on too much about that. That's not the most exciting thing, but you can see that bears certainly have control of that, and the euro does not look very strong at all. Pound versus the yen, I think we've done that one, haven't we? Okay, unless there's any requests, I'm just going to go back to the 4 pairs that I cover the most, because I do daily reports on these. So we'll start with the Aussie dollar. Let me see if I can get back my page to show you where we post some recent reports. There we go. So yeah, if you click on any of the icons on the front of any of the markets that you trade, you get an opportunity to see what we've written recently for these markets. As you can see, these are not last week's, they're the weeks before, but you can go through all the reports that we've written just for your own benefit. What I write at the top is a recap of pretty much of my sort of overview, but also what happened the day before, and I comment on how our levels worked, whether they did work, didn't work, what trades were profitable, or what trades we might have got stopped out on. So that just gives you an overview of the previous day. So it's worth having a look if you're interested in our service, because you can get to see what we wrote the week before last for a whole week, as well as those 3 reports, of course. Right, no, nearly loaded. And then the 3 reports pages here. I gave you the link, but if you go to the home page, you can just click on it here, and I'll show you what's up there. Right, hopefully this will load in a sec. Okay, here's the free page, just while we wait for that last chart to load. Today I've actually got gold up there. So if you trade gold, you can have a look at today's report right now, just on that page. Yesterday I posted WTI crude DAX, and earlier on last week, actually Friday, I posted a lot of reports for that non-farm payroll day, just to see if I could help anyone out there. And you can see almost every day we're posting up to a dozen or more free reports. So we go on the day before that, we had 9 free reports up there. So just worth keeping an eye on that if you find this useful. Aussie dollar, well, very negative trend. And even now, it looks like we could be breaking lower again. Just going to try and open this daily chart out, actually. Okay, so you can see how we've been heading lower. We managed to bounce from September lows, and we pushed up to the 100-day moving average. Did its job perfectly, didn't it? Hit that, turned around, back to the bear trend. We're now testing this trend line, joining up the 2 lows in September, and I don't think this trend line's got an awful lot of power. We are getting a little bit oversold. Okay, yes, maybe we can have a bounce, but you'd have to be pretty crazy to be buying into this just on the basis of of that one trend line. I think it's probably better to be looking for selling opportunities on any rally if we do see one. No, that trend line's not the most exciting one. Well, I think we do need a trend line here. There you go. So you can copy these trend lines on your own chart if you want to, but yeah, as I say, I think it's better to sit back, wait and see if we get a recovery, something to sell into, rather than try and pick a bottom. We're not even that oversold yet. We're certainly getting no buy signals. So let's see what happens with that trend line. But of course, a break below it would signal. I'm giving you this slightly shorter term chart so you can see that trend line a little bit better. There you go. There's the trend line joining up the 2 lows in September. So to pinpoint where it is, 70.20. Well, we bounced off it. Let me see. The end of last week, I think it was. What day was that? 8th of November, a couple of days ago. So yeah, a couple of days ago. Anyway, we've managed to bounce off there, and but really not much of a recovery. So we couldn't be turning around and about to retest it. 70.20 is exactly where it is. Watch that one. Doesn't look too good. If you're not short already, you might want to be thinking about selling a short below sort of 70.20, 70.10, especially on a close below. We've already dipped as far as, yeah, we've been down to 70.13. So I think, you know, a break below 70.10 should confirm that that trend line has been broken, and we should head lower. What else can I say? You know, any bounce into the low 71.00 area, 71.00, 71.20 should be potentially a nice selling opportunity if we do that over the next few days. Trying to get the dollar yen up. Okay, so you can see where the free reports page is on our website if you are interested. And yeah, this is just the Twitter page that I have, which is going quite nicely. We've got over 5,000 followers at the moment, 5,038. These are some of my tweets. A couple of notifications there, which I should read. Okay, dollar yen, here we go. Okay. Right, been heading higher since the middle of October. We got a really nice jump up, dollar pushing higher against the yen on the non-farm payroll number, needless to say. Then we ran into this trend line, so there's a good reason why we did come to a halt where we did. And if I scrunch this chart up, you can see why. Taking the low of January and just sticking a trend line on the chart, there's a very, very obvious trend line here, which has really done its job as we became rather overbought. This candle, not the most positive candle you'd want to see in this bull run. So we've got the long upper shadow, bit of a shooting star action going on there as we hit the 78.6 fib and the longer term trend line going back to the beginning of January. Looks like we might have a bit of a correction now, but I don't think we want to be getting aggressively short. That would be too risky. This does look quite strong. Might be safer to just wait, sit in the hands and see if we can find a buying opportunity once the overbought situation has been unwound. We've got a little bit of short-term fib support around the 122.80 area, but my real nice buying opportunity, I'd love to see it off 100 pips and down around the 122.30 area. I think that would be quite a nice little place to jump in if we got the chance. So that is my main level. I could stick a trend line on there. That's not really going to help much, is it? Take that one off. Yeah, that one's worth having just in case we do come off further. But anyway, you can see how this trend line here has done its job as well. This certainly not as longer term as the one I just showed you on the daily chart, but there is a very short-term trend line, and that's also done its job there. So really the resistance levels working quite well as we became very overbought. Also on the short-term chart, you'd have to be brave really to sell into those resistance levels, although there was 2 or 3 reasons to get short. So if anyone did do that, you could be looking at a little bit of a profit there. And yeah, as I say, I'd really like to see this down 100 pips on the correction to 122, 20, 30 area to try and buy back into a long. Below there, we've got the 100-day moving average and some action going on around the 121.90, 121.80 area. So that would be the area that we'd really have to hold above in order for us to then push higher again. Obviously, if we can get up through 123.60, that's quite positive. And really, there's just not an awful lot to stop us getting up to 124.50 and then even the August high at the 125.20, 30 area. So I think eventually we will do that. I'm just hoping we pull back to the low 122 area to give ourselves a chance to buy into some longs and then hopefully push up through there on the second test. I think we've only got a few minutes left, so I've probably only got a chance to go through one more pair. I'll do the euro, seeing it is a very big market. There you go. Pretty obvious what's going on with the euro. It was very dull indeed. We headed sideways, traded sideways for so long. And this is really becoming quite tricky to try and spot the levels and areas where we wanted to get in and out of this market. There was very few clues, no pattern, no trend. And at one stage, we were literally going up one day and down the next almost through the September and much of and the beginning of October. Anyway, since then, we have established more of a negative trend and we've broken below now the August low and the July low. So this is all looking pretty negative. We're below the May low as well. So that whole summer period and so it does look quite negative. Yesterday managed to stabilize well. Not a surprise. We are very oversold, but I certainly wouldn't want to be buying into this. If anything, I'd want to just sit on my hands right now, hope for a bounce and something decent to sell. We've got some resistance around the 107.90, 108.00. That's just purely from fibs, nothing else. That level did work yesterday. We had I had that on my daily reports. I don't know if you read them, but if you did, you'll know that we bottomed out just a few pips below that target. If we can get up anywhere near the sort of high 108.00, 108 area, just below the 109 area, I think that would be a nice selling opportunity in this pair. But that might be too much to ask at the moment in such a steep downtrend, especially when we've already broken so many monthly lows, as I said, August, July, June, of course, and May. So it's really looking quite negative. I wouldn't be at all surprised to see a retest of April lows eventually around the low 105.00 area, and of course we've got the March lows at 104.46, 104.56 rather. Is that the actual low for this pair? March low. Where do we get to? 104.56. Yeah, 104.56. That's the key. So yeah, a retest of that, I certainly wouldn't rule it out. And who knows, maybe even a break below there. So not looking good. Sell into any rallies. And I think we're pretty much out of time unless there's any questions for me. I'll click on cable. I don't even know if I'll have time to look at it by the time it loads, but I think we've got less than 2 minutes now. The positions I've got at the moment anyway, I'm short the Canadian versus the yen, which I think you know, and short Canadian versus the Swiss. They're the two best opportunities that I see at the moment. There's the cable chart. Doesn't tell you an awful lot, really. We've just been edging lower, really, over the past few months. This one also got extremely frustrating. The only thing that's really key here now, you can see, again, 100-day moving average did its job as resistance. That does work quite well so many times. Does look quite negative. I don't think we're oversold enough yet to start talking about a rally or a recovery. So I think that any bounce at the moment is a selling opportunity. I'll let you look at your own charts to find out some levels. The key for me really is this trend line down here, which I'll let you know what it is as soon as it tells me. If it's going to tell me, come on. There you go. Sort of 149.70, 149.60 would be the place to look for if we head lower, continue lower into the middle of November. That will be key. I wouldn't say that's the best support level in the world either, to be quite honest with you, but that is the one. That is certainly a target on the downside, if not a good support level. Okay, thanks very much, guys. This is going to be a regular weekly thing. Hope you enjoyed it, and I hope you can join me next time.